You kind of just touched on this, but I'd love to hear your assessment of the consumer pulse right now. How are consumers feeling? I mean, I know in covering small business and the restaurant sector, we are seeing a lot of spending. We are seeing a very resilient consumer. Do you agree? Do you think that will last?
Well, for the first time in a long time, consumers are saying that their current situations and their expectations for the future are very optimistic. For most of this year, consumers were just saying right now is okay, but we're worried about the future. We think a recession's coming. Well, some of that sentiment is pulled back. Consumers are saying that they're feeling better, probably because many of them are still working. They've seen some increases in their wages. Their real incomes are rising. That means income away from less inflation because prices have come off. And also, they're saying that for the future, they have less confidence that there is a downturn coming. They have more confidence that their incomes are going to be healthy and that their personal finances are going to be where they should be.
I was just going to ask, do you think they're resilient as we think they are, or will this hit a wall? Because we're talking about the back half of the year, and there was such a high expectation that things would slow down. There would be a potential recession. It seems like that's a less likely scenario now. So what does that mean for consumer spending, for small businesses, and for the inflation picture?
Yes, well, all we have is information for the first half of the year. In the second half of the year, we will have headwinds. So the lagged effects of interest rate hikes will start hitting consumer spending. Consumers are also going to run out of that excess savings from the money that they received during the pandemic. They're basically going to run out of that by the fall. Also, many people who have student loans are going to have to start repaying those student loans, or at least the interest, and that's going to cut spending. So we think that certainly for the second half of the year, we're going to see slower consumer spending. That is going to impact small businesses that cater to the consumer. But we think that there's a bright side. Certainly, once inflation gets really close to falling, maybe 3% or even closer to 2%, the Fed's going to start cutting interest rates. And we think that's going to start happening around the second quarter of next year. So that's a bright scenario for next year, where you have lower inflation, lower interest rates, and a more balanced degree of spending between goods and services.
You just mentioned next year and kind of a light at the end of the tunnel. What would those interest rate cuts mean for Main Street and for the inflation picture?
Well, certainly it lowers the cost of capital. It also invites consumers to get back into the game and buy those big ticket purchases that they tend to finance, like cars and homes and furniture. So that's all good news for small businesses. So I think that right now we have to go through the pain. There's a bitter pill that we have to take, but we'll feel better by the back half of next year.
And I'd love for you to talk a bit more about your outlook for next year and what do we think the top issue will be on Main Street? As I said, labor, inflation, supply chain, those have been the three they've been shuffling around in terms of importance and the number one spot. But if you had to forecast, what do you think it'll look like in 2024?
We think that labor shortages are still going to be an issue. It's a longer term issue. It's a structural issue. Why? Because we have the baby boomers, whom we love so much, retiring and leaving the labor market, and there aren't enough young people to come in and take their places. And even for the younger people, they don't have the experience yet. And so there's going to continue to be this ongoing challenge for many businesses in terms of labor shortages. So we think, especially for small firms, that's going to continue to be a problem for many of them.